everybody, I'm Janet Johnson with Charter School Capital. We'd like to welcome you to our Charter Edtalk today about facilities financing, and we're honored today to have Scott Rolfs, who heads up the charter school practice at Ziegler, and Tiny McLaughlin, who is the SVP at Ziegler, and John Dahlberg, who is heads up our origination for facilities financing at Charter School Capital. Welcome, gentlemen, and thank you so much for joining us today.
Thanks so much for having us.
Ziegler, the company that we work with, was founded back in 1902, and our founder, Ben Ziegler, it was started as an insurance agency, and then he reached out to the community, and the community needed infrastructure, hospitals, churches, schools, and he really turned that insurance agency into a bond underwriting firm specifically focused on infrastructure needs and community needs. And so from that, the Ziegler company has evolved over the years to where we are really one of the premier financiers for nonprofit community-based organizations. And we've done that through bond financing, both taxable and tax exempt. We've got a great history of it. And with our financing for charter schools, which we've done for quite a while, we added to the team a number of years ago, John Tiny McLaughlin, who's been a great addition. And Tiny will tell you a little bit about his unique background. I come at it from a finance and legal perspective. He was Ziegler for 25 years. And Tiny, you had a whole new dimension to it with your background as well.
Yeah, I was very fortunate. I was approached by Ziegler a number of years ago, and I had never even considered going into finance or banking. And in fact, when our CEO said, I'd like you to join the firm, and I said, and do what? He said, we'll make you a banker. And I said, are you kidding? He said, well, you'd only have to work with charter schools. I said, let's talk.
Yeah.
And so my background was one of leadership. I'm a former naval officer, and I was brought into a charter school on the west side of Chicago. I've been very active in education reform and to really help them turn around a failing school. Loved it. Worked there for a number of years and have remained on the board for more than a decade. I view charter schools as the most promising reform in terms of the ability to close the achievement gap that exists in this country. And that's why I love charter schools.
That's awesome. So we've had several talks about financing options, right? You talk about the need for change. There's 3.1 million kids that are going to charter school and another 1.1 million that need a seat, right? There's a huge waiting list. We spend a lot of time talking about the financing options. You guys are bond experts. So let's focus on bonds. How do you know when a school is exhibiting the indicators and is ready to explore bond financing to finance their school?
Well, I think one of the things that we've heard you reference on some of the talks you've done in the past is really loan size is the first part to start with. So getting out into the bond market, it can be a very, very attractive and great long-term capital solution. But there is a size where it starts to make sense, the size where it doesn't, and that really is dollar-wise. So what we look at is about $5 million and higher is where we think it makes sense to consult with an underwriter like a Ziegler to learn more about the bond market options. If you're looking at something less than $5 million in need, then it's probably better to look at some other options, lease purchase, etc., or a bank loan, whatever that might be.
Okay. So what does the bond market look for in criteria other than size, right? So if you're a $5 million school, or if you have a $5 million project, what else? What else should they be focusing on?
So one of the things with the bond market finance that's really important is being able to allow us to tell a story to investors about success with your school or with the model of your school. And so that can come up with either proven enrollment and track record in that regard. It can come up with perhaps some cash reserves that you've been able to build up. But it's important to note, though, that even if you are looking at a newer project, if you're part of a system, a CMO or the like, that has a proven track record, we can get you into the bond market in some cases right away for a new school, which wasn't the case, say, 3, 5, 8, 7 years ago. I think the bond market has matured, and the investors in the bond market have matured to where they really understand what makes a successful school, and as a result, the access has expanded.
And I'd add to that In the past there was sort of a de facto rule that you really had to have gone through a renewal, an initial renewal in order to go to the bond market. That's really changed now, and whether you can or you can't go to the bond market really depends on your relationship with your authorizer. If they show great confidence in you, even if you're a school that's only been around for 2.5, 3 years, there are times when you've demonstrated to them you're going to be around for the long haul. You're making an impact in this community. You're showing gains that are greater than the schools around you, and we really want to see you. And so we, in our due diligence process, we connect with your authorizer and make sure that you're in good standing with them. So, and that's a real, very important part of this.
And if I can piggyback on your history, right? You have a long track record in the bond market. Without getting into a macroeconomic discussion, the money moved up and down, right?
Sure.
We're coming out of an environment where historically money was called very cheap.
Right.
And the Fed is moving up. They're increasing the cost of rate. Does that change what a school needs to do or how they need to behave as we move into a slightly rising rate environment?
Well, actually, we would say that would argue to talk to us now, accelerated project.
Right.
If we were to share with you an interest rate graph showing just market interest rates in the U.S. economy over the last 100 years, you would see that the last 8 to 10 years have been an incredible time to borrow.
Right.
Very, very low rates. Those still exist. They've gone up a bit, but they still exist. We're still probably 3 or 4 points below historical 50-year lows on things like a 10-year Treasury bond. So to your point, John, there's a lot of discussion in the news. Federal Reserve, inflation pressures are coming.
Right.
Building costs are going up.
Double-digit inflation. We're hearing double-digit inflation in construction costs.
Exactly.
Certainly in a lot of markets.
Exactly. So not all markets. Some markets are definitely seeing pressure.
So I think one thing is we'd encourage people to move a little bit sooner if they can.
Right.
The second thing is with bond financing that we don't necessarily highlight enough is that bond financing allows for growth in the way of phased financings. And so let's say you're a school that has a $10 million project. We can go out today, get that financing for you, lock in a 30 or 35-year fixed interest rate. Now, you're growing, you're succeeding, you want to replicate and do another campus 5 miles down the road, say 3 years from now. We can do with bond financing, you can stack these. And so we can lock you in today's rates, 30, 35 years on project 1, come back and finance project 2 for you. Now, the rates on project 2 that you would have are probably, if interest rates are higher in the market, the rates on project 2 loan are going to be a bit higher. But we don't need to refinance project 1.
You do all the work now and you add money to the project.
You add money to the project, and it allows you to lock in, really, and keep that first phase at those low rates, which are going to be below market at that point 3 years down the road.
I think it's important to note that in a lot of financing sources, if particularly traditional bank debt, when you go out there, when you borrow, you will be told you can't take on any additional debt without getting our permission. What we're really talking about here is that provided you're making your payments and providing you're meeting all the terms of your bond agreement, you're allowed to go back to the market without asking anyone, provided you hit certain coverage requirements that you've pre-negotiated in the bond.
Tanya, I think that's a key point to note. There's a bit more flexibility, I think, in the bond market for growth, a little bit more objectivity, I would say, in ability to borrow funds for future phases for growth than you might have, say, in the conventional bank market, perhaps.
Okay. A 2-part question. Let's talk about the process of what a school needs to know about getting a bond. And related to that, can you compare and contrast what a rating is and how a rating impacts said process? Are they 2 tracks? Are they connected? Talk a little bit about rating and process, if you would, please.
Sure. I think process, the first thing on process is really we'd ask you to reach out to an underwriter like a Ziegler very early on in the whole process as your board is deciding maybe we need to expand, because where we can help you is we have a lot of historical metrics that we've compiled, statistics over the years on what is a safe debt load for a school. We want to help you achieve your vision and get that building, but at the same time, we don't want to put you in such a debt load that all of a sudden 6 months after that loan closes, you're saying, my gosh, how are we going to pay this back? How are we going to attract 500 new students to cover the mortgage? So we love for the schools to reach out to us early on so we can give you some ideas, some sort of guardrails on borrowing capacity before you would go out perhaps and approach a contractor or an architect and start really running dollar costs.
Right.
I think that's key one.
Yeah, we've too often seen in the market where a school will have a vision for a project and they'll go out and they'll design something without having any idea of what their real capacity for finance is. And that ultimately leads to disappointment. Real disappointment when they've designed what they think is their perfect school, but their model supports going up to 800 students, and the financing for that would need to be at 1,600 students. So it's very important to know what you can afford before you start design.
And specifics on the process, John, is working with an underwriter like a Ziegler. Once you're ready, have your building plans ready to go, it's about a 60 to 90 day process to work through the bond offering process. And what we do is we learn everything we can about your school, and we prepare a story that then we take out to our investors that we have relationships with that are very interested in charter school bonds. Mm-hmm. And we tell that story and communicate that effectively to them to be able to not only obtain the capital, close the financing, but drive down the interest rate to the lowest possible levels that we can for you. As noted, about a 60 to 90 day process. There's some attorneys involved because we need to work with some type of state issuing authority that is able to sort of bless the bonds, for lack of a better term, to give them their tax-exempt designation. But that's part of that whole timeline. So there's going to be a few attorneys we'll introduce you to, but we manage it and try to make it as turnkey as possible for the borrower.
Okay. I think one of the things that's really important as well is that in order to go to the bond market, you need to be, what we like to say is shovel ready. Because investors are providing you 30-year money, because they're providing it, you go to the market once for this. What they don't want to find out is that, oh, by the way, I didn't get my zoning approved on this, or oh, by the way, I was unable to secure permits, or yeah, we didn't really get a very solid bid from the contractor, and it's going to be 40% more. That's exactly what investors don't want to hear. So you really want to make sure that essentially the day that you close the bond, if you're going to be building, that's the day you're going to start.
You've got those
put the shovel in the ground.
Costs are locked in. That's the big thing.
So.
And how does rating fit into that?
So for those not familiar with what a rating is where a third-party entity is going to assess.
Not you?
Not us.
Okay.
It would be a third-party entity. Names that people would be familiar with, such as Standard & Poor's or Moody's, like the large, what they call the national rating agencies. That third-party entity is going to take a look at your school's finances, and they're going to assign a letter grade. I mean, everyone listening to this is involved in the education world. It's just as getting that grade on your paper.
It's not pass-fail?
It's not pass-fail. No,
Okay.
It's not pass-fail. But they could assign an F to it, but we don't. But they're looking at the creditworthiness, what they perceive to be the creditworthiness of your school to borrow this amount of money, and they'll assign a letter grade. And just as with the classroom, B's and A's are better, and that's what we want to head to. Now, specifically on should you get a rating, we would say what's interesting is in the bond market today for charter schools, the majority of the financings now are being done on what's known as a non-rated basis. So that the schools are not going out to a Standard & Poor's or a Moody's necessarily getting a rating. There are some advantages for really super creditworthy schools with a great deal of cash on the balance sheet to get those ratings. That's where we come in as an underwriter to help advise what makes sense. But investors in the charter bond world have become very sophisticated in analyzing the borrowings of different schools. And they actually are not necessarily placing a lot of stock in
less reliant on that third-party look.
Yeah, so what we're able to do is save the cost of a rating in certain cases. And probably 6 out of 10 are non-rated right now.
And one of the real important things there is that Ziegler has a significant number of analytical tools So when we go into this process, we'll help you say, if we were to go to a rating agency, this is the likely rating you would receive.
Yeah.
And we only, we do encourage people to go through the rating process if we think it's going to lower their overall cost of capital. If we don't think it will do that, then we have a discussion. It's obviously the school's decision on it, but in particular, in the ratings world, there's a term, investment grade and non-investment grade. The investment grade world is triple B minus or better, or sometimes Baa3 or better. If you're able to achieve those, there are a couple of good things can happen. One, the universe of investors who are allowed to invest in you goes up. More competition for your bonds, lower cost. The second is there are at least 4 states in the country right now that have what are called credit enhancement programs, where the state either puts a pool of capital behind it in case there's a default, or it puts what it's called its moral obligation behind it. And that can dramatically reduce your cost of capital into the high 3s and 4s in today's world for 30, 35 years. So if you're in one of those states, or if you can achieve that investment grade, very significant, very important to do it.
So then the first move for a school might be to contact you and then work together on the rating, not start with the rating.
Exactly. Don't start with the rating.
The rating is, we're trying to we counsel our schools to stay on mission, right?
Right.
It's going to take, as I understand you, it's going to take time and money, which is going to take focus away from the classroom to do a rating. Is it expensive?
Ratings can cost between, say, $30,000 to maybe $70,000, depending on the size. Part of it's a function of the size of the financing.
Okay.
Whether you're borrowing $10 million, $20 million, you're a network that's borrowing $40, $50 million. Mm-hmm. And so that's where we'll do the analysis for you. We'll say, this is where we think the cost of capital will be with the rating. This is including the cost of the rating. We'll build that factor in. And then we'll say this is where the cost will be without a rating. And then we'll let the borrower make an informed decision as to which direction they want to go.
So given your experience, right, hundreds of bonds that you guys have done for schools over the last decade plus,
yeah.
Can you share some of the pros and the cons? I mean, you're good at the pros,
right?
But what are some of the cons that schools really should be mindful of when you do an honest assessment of the plus and the minus?
Well, I think you have to look at what your other alternatives are. I mean, that's really the big thing, is for a number of schools, the bond market can present to you your lowest cost of capital and can provide a true 30 or 35-year fixed interest rate so that you can focus on your educational mission once that bond financing is closed, because you're not always worried about, boy, this lease is coming up, or this bank note that's only 5 years, the interest rate's going to reset. I'm a little concerned on it. But I think it comes back, John, to the size of the financing is really one of the big things, is you have to weigh out the pros and cons. Before we came over time, you were talking a little bit relating to availability of facilities and cost of facilities in some markets.
There are a lot of places where even if you wanted to purchase a facility, you can't.
Right.
Just the real estate just doesn't exist. Landlords are unwilling to sell. I fall back also on your academic readiness as well. I mean,
right.
Like everything else, there's no point in having a charter school unless you're going to do something better for kids than what's available. And you have to have demonstrated that in order to go to the bond market. Mm-hmm. And I would also say you have to have a demonstrated history of success. You're not going to be able to go if you're a brand new school right out of the gate and you're not a replication. So you have to have a track record of both academic, leadership, and financial success. So that's what I'd say.
Well, that's very helpful. Thank you. The one last question, we're at the National, Alliance, the conference right now, and we're spending a lot of time talking about advocacy. From your perspective, if you could give a school some advice about how they can partner with their association.
Let me take this one time, because I was just at a session that was talking about the political landscape in 2018. It was a great session. And one of the speakers there noted that the most effective thing schools can do to ensure that the charter movement continues to prosper in the future is to have your local politicians and representatives at your school constantly. And what they said was, politicians are always looking for an opportunity to speak to voters. And they said so many times, maybe a state legislature might pass a favorable bill for the charter movement, school choice movement. But then the people in the schools, the grassroots people, maybe forget that. Invite those legislators back who are keys to your success. Have them come speak to your kids. Have them visit for a day. Have them there for the ribbon cutting. Because now you brought them aboard as partners, and those folks are going to stay long-term partners, hopefully with you within your state framework.
Scott, you took the words right out of my mouth. I tell every single school that look, I've yet to meet the politician out there who doesn't want their picture taken doing something positive for kids. And so you're asking them to come. They're more than willing to come. They're looking for that photo op. And it doesn't have to be a big thing. It doesn't have to be the ribbon cutting of a new school. You can ask them to come and do your kindergarten reading program. What politician doesn't want that picture taken?
Right.
And so
8th grade promotion ceremony.
that's right.
Yes.
And so those are great opportunities out there. That, just remind your local politicians that you vote and you're active in your election cycle.
Gentlemen, this has been really interesting and really appreciate your time today. People can get a hold of you at
Ziegler.com.
Ziegler.com.
Visit our website. We've got a lot of resources up there for charter schools, webinars, pieces, statistics, everything that can help. So give us a call.
Thank you so much.
Thank you very much for having us.
Thanks.
Appreciate it.